Hi everyone, welcome to my channel AV Commerce Academy. Today we learn about some basic concept of accounting. It is a theory basis of accounting. It is a basically we know about every commerce student. So first we start with the business transaction. What is a business transactions? So simply we know about the transaction. It is exchange. Exchange means whatever we taken or given. Means transaction. It is a two-sided one. It is a taken or given. So here is a business. Business was nothing but it is a we earn for the profit for the buying and selling. So here it is a business transactions means the exchange of goods and service for the cash or credit by the business with the outsider called it is transaction. So here it is a transaction means here is a two-way transaction. It is example we get the goods and we paid the amount or credit. So here it is a goods and services. In the business we have to only two products that we have to business deal with. One is a goods, example it is a product, and service means example like we take the hotels and bus and train services. So here it is a two products, one it is a goods, another one is a services. So here is a we call this business transaction. And business we for earn for the only for the profit purpose. So it is a business transaction. Next one it is uh, entity. What is the entity means? uh, Entity means here is a business owner name. We like Tata, Reliance, Amul, Sony. It is entity means the who is the business owner. We call our business. We call it is entity. And next one it is a transaction. So transaction is uh, exchanging the goods and service for the considering. Transaction means it is having the both side. One is a goods or service, or another one say you get the cash or service. So next one it is assets. What is the assets? The example it is these are the properties or economic resource of any enterprises which can be expressed the monetary terms can be divided into the two parts. So tangible and intangible. Assets meaning it is self provided whatever we have in the business, that is a business purpose using the assets. Example fan, computer, and whatever maybe we having the assets that is the help for the selling the goods in the market. So that is we are categorized into the two type. One is a tangible assets, next one it is a intangible. Tangible means who can touch and feel that assets, that is we call land and building and plant and machinery, furniture and office equipments. This is a tangible we can see and we can touch. And intangible assets, that is we cannot touch but in the market we have the value in the market. Say example it is goodwill. Goodwill nothing but it is a brand value in the market. Example LG brands and example Sony brands. So they having the some goodwill in the market. The customer will faith and trust on that product, that is we call goodwill. Next one it is a patent. So patent nothing but it is a whatever you have invented in the first time. So you have to name in your rights, that is we call patent. And next one it is a trademark. Trademark nothing but it is a company's name or logo, whatever it is we call trademark. Next one it is copyright. Copyright nothing but is a copying the anything that already written by that we have to take that, that is we call copyright. Example we dubbed the south film in the Hindi films, so that is we call copyright. So we are taking the permission from the original to make them same things in the another way, that is we call copyright. Next one is a computer software. Computer software, that is a software that is a intangible assets means like we cannot touch but we can purchase, like Microsoft and Tally. It is a softwares. So here is a assets. And next one it is current assets. What is a current assets? Current assets means that is a movable. We that is why we call that is one current assets. In the fixed assets, the company whenever having the till date they have the equipments, but here it is a go on or received on. So first one it is debtors. So debtor nothing but it is a we call that is a providing credit to the customer, that is we call debtors. Example, take that we pay to the customer with the credit, so it is we call debtors. And next one is a bills receivable. Bills receivable is a customer is providing us to bills in the form of, it is called bills receivable, still they not paid to us, that is we call bills receivable. Next one, it is cash in hand. Cash in hand nothing but is a company having the in hand cash, that is we call cash in hand. Next one, it is cash at bank. Cash at bank nothing but is a company having the bank balance. Next one, it is checks in hand, means that is a customer have to pay received still not received the checks, that is we call check in hand. And next one, it is a draft in hand. And next one is a stock. And next one, it is a prepaid expense. These are the current assets because it is a not fixed in company, so that is we call current assets. So next one, so assets is are the definition. Assets means assets are future economics benefits that right which are owned or controlled by organization or individual. So assets, that is help to the sell the products, that's assets we call assets easily. And next one, so here it is some liabilities. What do you mean by liabilities? First we know about the assets, now next one, it is liabilities. So example, liabilities nothing but it is a company owner whatever having the investing in the company, that is we call liabilities. First one, it is non-current liabilities. Second one, it is a current liabilities. Non-current liabilities is a nothing but it is a whatever we have taken from the other outsiders to make the business to start or run that is a bank loan, mortgage, and loan from other institute, long term liabilities. So it is we call non-current liabilities because so we taken from the another person or another institution, that is we call non-current liabilities. Current liabilities, it is we call we have to pay the owners, so like traders, we have to take the credit on the products to purchase. So it is credit nothing but it is a creditors nothing but it is a we have to take purchase from another products on the credit. It is simple meaning, it is so taken credit products and selling to the customers. So bills payable means you have to pay the bills still not paid. Outstanding expense, we have to still not paid any expenses. And bank overdraft nothing but it is a we have to take taken from the our limit from the bank, it is we call bank overdraft. And next one, it is a trade receivable. And this is a debtor, this is a person who own an enterprises amount buying buying goods and services on the trade. So here is a simple word, that is a there are the person who own to enterprises amount for buying a good service on the trade. And bills receivable is amount to be received against bills receivable from the debtors. So same things here also. And next one, it is a trade payable means creditors and bills payable. These are the person who have to pay enterprises amount providing the enterprises goods and service on credit. So we are taken company taking the credit products and providing to the customers. And next one, it is what is the capital. Capital nothing but it is a company whatever investing in the business, that is we call capital. And next one, so it is a sales. Sales is the two sides, one is a cash sales, next one it is a credit sales. So cash sales means so that is we know about. And credit sales, credit sales considered as a debtor sales. So next one, it is a revenue, it is the amount which earned by selling the product, it is called revenue. And next one, it is expenses. Expenses means it is known as a cost assets consumer or services which used. And expenditure is a different, it is means spending the money for the some benefit. So next one, it is profit. Exercise of revenue over the expenses is called profit. Means here it is your revenue is higher and expenses low, that time it will be a profit. And gain, it is generated from the incidentally transaction sales or fixed assets winning court and cases, it is we called loss. Means expenses of expenses our income, the term as a loss. Means here is a your income is more than your expenses, that time we get the loss, and discount it is providing to sell to the products, and voucher is nothing but is a evidence of purchasing or transaction, that is we call. Next one it is a goods, nothing but it is we call raw material, work in progress, and finished goods. Drawing means it is a use for the personal purpose from business. And next one it is we know about the purchase. Purchase is nothing but it is a selling for the products. And next one it is a stock. Stock nothing but it is a whatever we have selling for the goods or unsold goods, that is we call stock. And next one it is opening stock, and other way the closing stock. Here it is balance sheet. So same things here, it is liabilities means whatever investing in the business, whatever outsider loans, whatever it will be. And here it is a company having the fixed assets and current assets, that is we call balance sheet. Here is a both side will be equal side, liabilities also and assets, that is also same.